And good evening. This is the Elliott wave update for the S&P 500 for Monday, March 21st, 2022. There's not much to be adding over what I presented on last night's update. The S&P did manage to get up to an additional new high for this particular sequence at 4473. Unfortunately, I cannot mark it as the completion point for the minor wave 2, which has now been extended over. And due to the fact that the market really just came off in a three-wave pattern, and if I can open this up a little bit, I can show you. There was the three-wave pattern down, and then continued to rally back above our moving averages. So that continues to leave open the possibility that we may yet get up towards 4,523, and that then becomes the zone, again, what we presented yesterday, for a 45.23 to 45.69.70 was the zone that continues to be in force to complete the minor wave 2. And actually, I got to take that back because, as I said yesterday, I think it's up to 45.70. That would break above, I believe, this wave 2. No, actually that wave 2 is at 45.83, 84. So it has to be a break above 84 would then negate this count and push it into the alternate count which I presented yesterday, which I'll just review real quickly. That would then suggest that this is an intermediate A, intermediate B. This low that we had at 4101 would be intermediate C, and then underneath it would be a primary wave A. And that all of this, if it breaks above there, would be in a primary B wave. And then we would continue to track that as it moved higher. Again, that would only come into play if we broke solidly above 45.84. So right now, we have to leave open the potential for the market to continue to move higher. Our resistance zones are, we should have some at 44.84, 85. That would be our next support coming up above what we did today. Then we have 4,500 and then 45.23. Now I am really feeling that the market is continuing to move higher, but it's running out of steam a little bit. Doesn't mean that they won't come in tomorrow and just blast it through, but it does feel like it's running out of steam. And that continues to support that we'll move lower. Now, that, excuse me, that would be based on that this has turned into a three-way pattern down. Now, what else it could be is 1, 2, 1, 2. Now, if that's the case, what we are now looking for, of course, is if we're to roll over, break below the 4, the 8, and the 20, 20 sits at 44.43, and then break below the 50 at 44.17 is where it is right now, 44.16.50 actually, but anywhere between 16 and 17, and then break and clear, not just break, drop, and then recover, but break and keep going below 44.16. That's what the market has to do to let us know that this is a 1, 2, 1, 2, and now we're dropping in a third wave. And so the intent or the expectation would be that it starts to break that, breaks 43.79, breaks 43.54, and heads for the hourly 200, which is at 43.29, and break it. Not just head for it, but break it and keep going. So that would give us the confirmation that we're looking for, that this completed the minor wave 2 and that minor wave 3 is now in force. To this point, it's still open. So for tomorrow, we need to continue to allow for new highs above 44.73. Again, we have that resistance at 44.85, some price resistance, and then up at 4,500. Ultimately, though, we could get up to 45.23 with the next zone above that at 45.69. What the market cannot do during this particular cycle, this particular sequence, is break above 45.84. A break above there shifts all of this over to the alternate count, which I just previously demonstrated or just showed. So for tomorrow, continue to trade smart, use the moving averages. The trading, it was okay today. The moves were nice, not the best. And when things did switch to the downside, it did follow through. But the afternoon, it got a little bit sketchy in terms of like follow through until we got into that last hour. And then, you know, all the buyers came back in and just pushed it up higher. But I'm going to leave it right there. Continue to use those moving averages. We're going to be really watching them tomorrow for continued signs of the market breaking down. And we'll use them again if the market continues to go higher. It normally will be guided higher by the 4 and the 8. And so any pullbacks would be looking for that move between the 4 and the 8, and then with the possibility of getting down to the 20, but then launching once again. So next update will be on Tuesday, the 22nd.